It seems investors broadly are expecting now that we're going to get a stimulus package sooner or later. But I do wonder, though, are you concerned at all with the latest eco numbers that we're getting, whether it's U.S. consumer spending or confidence, incomes falling as well?
Yes, our latest economic numbers here in the United States have been mixed. Today we got jobless claims that were once again above 800,000 and continuing claims of 5.3 million. So the job market continues to be very weak. And we also have consumer confidence that took a hit also this week. Additionally, we're seeing retail sales fall. Housing has also come in a little bit from what was a very hot market. So we are starting to see the effects of this rise in COVID cases and some additional restrictions take their effect on the economy.
And yet the Treasury markets seem to be doing what they've been doing on optimism about Brexit, about the U.S. stimulus package as well. We are seeing now the Treasury yield curve steepening to 4-year highs. What are the opportunities as we head into 2021?
So we still continue to see opportunities in equities, in particular, U.S. large caps and U.S. mid caps. We recently did increase our allocations to small caps as well, to more of a strategic weighting. And we increased our allocations to emerging markets. And we took some of those allocations out of investment grade fixed income. The only place within the equity complex where we are still underweight is developed market equities. So, we'd say large caps, mid caps would be our first choice here in the United States. And then within the fixed income area, we like those parts of the fixed income market that are yielding more, like high yield and preferreds.
Tracie, one of the interesting things we saw today was the Nasdaq closing a little weaker. It's been a bit of a haven during 2020. Considering the confusion around U.S. stimulus, what was going on there? Was it a bit of profit taking maybe, or something else?
It very well could be profit taking. The Nasdaq index is up more than 40% so far this year, and that's far outpaced the S&P 500 and the Dow. And so investors could be coming in here at the end of the year, taking out some of those profits. But it could be other things as well. With interest rates climbing, that does start to have investors reassessing the valuations of growth stocks. And another potential component could have been that the veto of the defense bill, in which President Trump did say that part of his concern was around technology companies. So there's probably multiple things going on there.
I believe the last time we had you on the show, you were a little bit cautious around EM. We've seen the US dollar strengthen a little in the past week or so. I'm wondering what your forecast is for EM into 2021.
So I continue to think that the emerging markets are going to be the strongest area in terms of global growth in 2021. But in terms of the emerging market equity markets, we actually are starting to think that that might be a good place to have some of your allocation. In fact, in terms of our price targets for 2021, the returns that we're anticipating for both U.S. large caps and for emerging markets are in the upper single digits.
What about EM debt? Because it's been a really record year for 2020 when it came to debt issuance and even performance, the best in about 8 years. Can we continue that?
So it's possible with very low interest rates globally that investors are going to continue to look for places where they can generate some excess yield. And certainly emerging market debt is one of those places.